Hello traders, welcome back to our channel, the Forex Trends, and I hope you all are doing well. So, all right, let's start the today's analysis session, and I will look at what opportunities are in the market for today and tomorrow. In this video, I am going to analyze gold, that is XauUsd. And one thing more, in today's video, I will first look at possible trade setups in gold. After that, I will talk a bit about the impact of the previous newses, and at last I will explain the Fed dot plot and how to read this dot plot and how to work from a broader picture. So this video might be a bit longer, so stay tuned with until the end of this video. Definitely you will get some new thing today. Okay, then let's start the analysis. Is the chart of gold in 4-hour frame. As you can see how nicely work our level at this point. We had analysis for selling at this level as there was a flag limit pattern in 1-hour frame. If you want to look, there was a flag pattern. It is a flag pattern. Okay, and how nicely it worked. So let me delete the drawing. Okay, let's start with 4-hour frame. Now in 4-hour frame, we had a strong day level support is there, that is 2280 22277. This is a good support to buy gold. If we get the price at this level, we can initiate a buy from here for 100 to 150 pips. And mind one thing, there is a pending retracement of this level. So according to the structure, the price may go up to this level, that is 2355 level. So 2355 level is a good level to sell for longer run. So this is a two trade setup in 4-hour frame. Let me shift on 1-hour frame. If we check on 1-hour frame and mark the structure in 1-hour frame, it is an internal structure of 1-hour frame: higher high, higher low, then higher high, higher low, higher high, and now market has formed a change of character here because this was the last low of 1-hour frame. Whenever market create change of character, we have three positions to join the existing trend, and the first positions to join the sell trend is here. In 1-hour frame, if we get the price at this level, that is 2310 to 2312 level, we may initiate a sell on tomorrow or tonight. Okay, mind this setup. If this resistance is unable to hold the price and it breaks by the price, then we have the next level, that is here. So in this situation, this is a good resistance at Quasimodo level. So this price will may work for sale again. So hopefully we may get the price at 2312 level, and the price again start coming down from this level. Okay, this trade setup for intraday purpose for today and tomorrow, and Here is a buy at 22802 to 2277 level. If we get the price at this level, we may initiate a buy. If we get the price this level, that is 2310 to 12 level, we may initiate a sell. And we have another level, that is 23202 2324 level. So if we get the price at this level, we may initiate a sell from here. So if I plot the Fibonacci now for this, for the last swing, uh, if price come to this level, then this will be a 50% retracement level if price come to this level tonight. Okay, in that case, there will be a second confluence of Fibo, and definitely it will work better if we get the price at this level. Okay, so this is all setups for today and tomorrow. Let's have a look in the economic calendar for newses and the impact of the newses. This is the economic calendar. As we know, we have a big newses, that is PPI. It is also pertaining to the inflation data, and the actual data was less than the forecast. That means the inflation of US is cooling down. As we know, the previous day we have the inflation, that is CPI data. It was also same, negative for dollar, and the PPI is also negative for dollar. This is an indication of some weakness in inflation in USA. Okay, so this is the fundamental of US, and we have we had Fed Chair Jerome Powell's statement the yesterday night, and he was hawkish on their statement. Okay, if you if you heard his statement, then you can understand. He said that so far this year we have not got greater confidence on the inflation in order to cut. And he also said we have made modest further progress but need more good data in hand. Okay. After that, he said we will need to see more good data to bolster confidence on inflation. And he added more statement that we does not expect it will be appropriate to reduce policy target range until gaining greater confidence in inflation moving sustainably toward 2%. That is their mandate of inflation, 2%. Okay, that's all our hockey statement for their currency. That's why we can see bearishness in gold market and hawk bullishness in dollar index. Let me show you the dollar index. In dollar index, it is bullish, but still in the range of 104 to 105. We may see dollar up to this level, that is 106.50 level, as they are hawkish on their currency. So we'll plan according to this movement. Okay, so that was the previous Fed Paul statement, and Now let's start the last thing and very interesting thing to discuss. So that was a statement from Fed Chairman Paul during the press conference last night. Now let's look at what the dot plot of economic projection is describing us. Let me open the dot plot of this is a dot plot of Fed. Okay. So the SAP, known informally as the dot plot. Actual name of this dot plot is SEP, and informally it is known as dot plot. And dot plot is a forecast for the interest rates offered by the 7 Fed governor and 12 regional Fed presidents. That is total 19 members is there. Okay. The Fed usually its projection at the end of each quarter, and starting from March, followed by June, then September, and then December. The Fed is March and June projection extend through the next 2 years, while the Fed begins estimating rates out into third year in its September and December updates. Okay. So official also provide a dot for the longer run, which represents the so-called neutral rate of interest. Okay, or the point where rates are neither stimulating or nor restricting economic growth. If you can see the dot plot, for example, the Fed's latest projection uh, show that four officials see borrowing cost, that is interest rate, holding steady this year. Look, let me delete first this drawing. Look, the four members. Every dot represents a member. Mind this thing. Every dot in this graph represents a member's view. What their view for economy and the inflation rate, and what they expecting for upcoming mm, quarters. Okay. So uh, it shows that four officials see borrowing cost, that is interest rate holding steady this year. These four members, and while 15 still expect rate cuts, these 15 members are still in the favor of rate cuts. Okay, look, that is the 5.55 interest rate, and this is 5.1, and this is 4.9. Okay, guys, and the projection is for 2024, and then 2025, and then 2026, and for longer run, what would be the interest rate for longer run. Okay, so the Fed members, what they expecting, let us see again. So their four members are expecting the interest rate will remain same, and other 15 are expecting to cut the interest rate by the end of the year. Meanwhile, seven officials see 1 quarter point rate cut in 2024. These seven officials are see on quarter point rate cut in 2024, that is 25 basis point, reflecting the median estimate. It is the median estimate. But eight officials see two cuts, and this is the officials are expecting two rate cuts, that is one at 5.1% and another at 4.9%. Okay. Looking further ahead, nine officials see the Fed's benchmark falling to target range of 4 to 4.25%. That is 125 basis points lower than the current level. Current level is 5.5 and 125 basis point lower than the current level. Okay. The Fed dots can also give a glimpse into how officials are reacting to incoming data. Okay. The last time policymakers updated their projections, for instance, nine officials estimated three cuts, while one official saw four reduction. But in June's update, this is the June's update. In June's update, however, no officials continued to expect three or four rate cut. Look, there is no officials expecting three or four rate cuts. So the Fed is now projecting 1/4 point rate cut by the end of this year. Okay, guys. So let me delete all things. So if I summarize the whole fundamentals, the Fed members are still giving bullish statement, but their projection includes one rate cut by the end of this year. Okay, as we heard the yesterday night, they are continuously giving us a bullish, oh sorry, hawkish statement, but their projection includes one rate cut by the end of this year. Ac- According to the previous economic data, their inflation is really cooling down. So, why is the Fed still hawkish? Let me explain. The Fed remain hawkish because the economy is still very strong and there is no risk of recession in US, and and they do not want their currency to weaken. That is the first reason. Ultimately, their narrative is for soft landing. They want to soft landing on their economy without losing their currency power. In other end, as we know, the rate cut session has started, as Europe and I think Canada has already cut first cut on their interest rate, and the US is also expected to cut rates once this year. So ultimately, in the longer run, the dollar will weaken. However, the dollar might go up a bit before coming down and then decline more gradually. That means, already I told you guys, dollar may go up like this, like this, and after that, ultimately dollar have to calm down for longer run. Mind this thing. Okay, therefore we need to plan our trades accordingly. So that's all for today. I hope you all understand the dot plot and the US economic condition and US fundamentals and overall sentiment of the market, what it stands right now. So we'll plan accordingly for our trades, and definitely I will inform you all the things time to time and give you best trade setups for day purpose and swing trade purpose. And I also recommend you to practice all the trade setups which are given here in demo account. After getting confidence, you may go to the live account. Okay. And please try to avoid over trading in gold. There is other more good pairs in this market. Also concentrate on them, and do not try to open any trade in between the levels. Let the market come to your levels, and after getting some evidence, initiate your trade. Whenever you get any evidence, or whenever you get the price at your level, don't afraid to take positions. There is no there is nothing to lose if you set your SL in a calculated range. So all right, that wraps up today's analysis of gold. If you really feel it is informative and helpful for your trading, please make sure to hit the subscribe button and turn on the notification bell. By subscribing, you will stay updated with all our latest content, tips, and strategies that really help you to trade smarter and more profitably. Thanks for watching, guys, and stay tuned to our channel for more videos like this. We look forward to seeing you in the next video. I hope I will make another video for weekly analysis on Saturday or Sunday. Until then, trade smartly and enjoy your weekend and trade safely. So, bye bye, guys. See you again.